Hi, welcome to this video day. It's the 19th of June, it's Sunday. In today's video, we're going to look at catching and holding big trends, a trend following major moves. Now, in relation to this, I want to look at three pairs. I want to look at Euro USD. I also want to look at the Euro against the JPY. And finally, a Euro correlated currency against the USD, which will be the Czech krona, so USD CZK. We're going to take a look at the trade setups in just a moment. Now, in videos this year, we've just been heavily bearish of Euro USD. It's had a really great fall to the downside, and it's got way more downside to come. The big fundamentals that drive big trends are firmly against the euro in our view, and they're going to get worse. Now, in terms of Euro JPY, Euro's been firm. We're looking for a big trend reversal to the downside to be confirmed, and in USD CZK, we view it as a low risk buying opportunity. Now, if you're following big trends, all you need to do is just do very simple fundamental analysis. Just check sentiment, and then in terms of the technicals, keep it very simple. Now, in terms of the trade setups, let's go and take a look at them right now. But just before we do so, always please do keep in mind, it is my view as of right now. It could of course change in line with the market action and conditions. If you want to learn all our trading techniques and also check out our daily technical sentiment analysis of 14 pairs, including the three we'll look at right now, all you need to do, just click on the link beneath this video and you can get live access to our member centre. You can also follow our Facebook page and join our Facebook group of traders if you wish. Right, let's go and take a look at the trade setups. And the first one we're going to look at is Euro USD. Right, in terms of Euro USD, big trend is down. You have seen rally, correct oversold there, down. A little bit of a rally. I think now you're going to see a big meltdown in the euro, 500 pips or more on the downside. Now, in terms of how you might play this trade, if you wanted to trade the short side, I'll go through that in a moment. But if you're making a judgment that a pair can move by 500 pips or more, you can't do it from the technicals. You've got to look at the big fundamentals and sentiment behind the charts. And I'm just going to go through some charts in relation to this and why we're so bearish of the euro. This is the first chart here. It shows key interest rates, where the market sees major economies where their interest rate could be going. Now, in terms of the euro, light blue line, you can see it here. We're negative rates at the bottom of the chart. That's at this moment in time. But the market sees rates going up to 1%. We just do not think that will happen. Okay, now obviously interest rate differentials very important, and the USD holds an advantage. You can see here, I did this chart, updated it last week. I have to put new charting. Yeah, USD market's now looking for, I think it's 3.5%. Okay, so the USD holds an interest rate advantage now, and I think obviously going forward, basically Eurozone or the ECB are going to disappoint. They cannot get rates up to 1%. In fact, I think Eurozone faces a massive crisis in relation to borrowing costs, which brings me over to my next chart. From the chart of the 10-year Italian bond. Now, in terms of why it's important, the ECB are looking to raise interest rates. The market thinks they're going to raise interest rates, and that spikes bond yields. Okay, now you've got to keep in mind, in the zone, it isn't just all one country, is it? You've got strong nations and weak nations, and Italy is a weak nation, and bond yields, borrowing costs have spiked up towards the 3% level. Italy cannot take that level at all. It's too weak. Okay, now you probably read about it in the media that the ECB called an emergency meeting about this, but they didn't come up with any real concrete action. What can they do? We'll have to wait and see. But if you're raising interest rates, yields are going to go up. If the ECB do nothing, then I think confidence will kind of go in the euro a bit. If they do something, does it mean that they can't raise interest rates? It's almost an impossible situation to resolve. So we'll see how it gets resolved going forward. But whether the ECB raise rates or not, the zone is going into recession. Here are manufacturing PMIs, a forward indicator on the economy, and you can see they're falling. A couple of good charts here from Bank of America. Recession coming soon in Eurozone. The market doesn't see this generally, okay? They say here, two Western European economies on the front line of the war in Ukraine, sorry, Italy orange and Germany blue, have their manufacturing PMIs and forward-looking orders minus inventories falling sharply. That warns of a recession. You can see it here, just going down. It's basically zone-wide, but Italy and Germany most exposed to Ukraine, and there we go, down. Now, in terms of the problem for the zone, even if the ECB didn't raise interest rates, the zone is going into recession. I've shown this chart before. Eurozone spends almost 10% of its GDP on energy, more than double the amount of the US. And who is it exposed to in terms of energy? Russia. Now, the EU have obviously put sanctions on Russia, and Russia is fighting back, obviously. Probably seen in the media with Gazprom restricting gas flows to Europe, etc. The energy cost spike in Europe is giving the economy a massive hit. Now, there's a lot of talk about the EU getting away from Russian energy. They can't. This comes from the EU Commission. This is actually the marketeer's comment. Best shot misses. I mean, look at what they're trying to do. Heat pumps, renewables, whatever. That isn't going to replace Russian gas. Okay. So you've got the economy going into recession. Obviously, the problem with interest rates is just not looking good for the zone. The ECB have an impossible task. Market still pretty optimistic on the zone. We think that optimism will evaporate and the euro will break down hard. Right, let's go back to the chart of Euro USD. All right, back on the chart of Euro USD, just want to explain some of this price action. You did rally up towards the 108 level the market seeing the ECB hiking rates going forward. It gets priced in, and then you get a nice fall there. Rally back to 106. You just poke it on that blue candle. We're red. With all the problems in the zone, just see limited upside and plenty of downside. What would you do if you wanted to come in fresh? We're already in, as you can see, at the top of my chart of 106.80. We've got the stop at 106.20. So just back behind this double trend line resistance. Now, in terms of 106, I'm looking for it to hold the rally. So if we opened below 106, you could just sell. You'd have 130 pip risk for the potential at the close on Friday, potential of 500 on the downside. Okay, so decent risk reward. Let's say we did rally and we did get through 106 and our stop was clipped. Okay, all we'd do is just sell back through 106. Okay, so through the round number, just look for the breakout to the upside to fail, and then stick our stop back behind the next round number in the candle I'm highlighting here. So probably behind this body. I'd see if we did rally, but yeah, about 107.40. So yeah, big fundamentals look very bearish to us. Market a little bit too bullish on the zone. So yeah, hopefully going far lower. I mean, we might not melt down to the downside tomorrow or next week, but I think a big move down is coming soon. So we like to look at the euro, obviously, from the short side, and we're looking now. Next pair, we're going to be a Euro JPY. All right, Euro JPY, and at the moment we're flat. We have no position in the market, but we're looking to get short. Now, in terms of the yen, it's been sold off hard in recent months due to its low yield, negative interest rates, and unlike the ECB, the Bank of Japan have got no plans, or they're not indicating they're going to raise interest rates anytime soon. So the yen has been sold not just against the euro, but just generally. Now, the problem, I think, is that story now means that large amount of speculators have shorted the yen. Okay, is it going to get any worse for the yen? I don't think so. In terms of the Bank of Japan, there is a risk of intervention. Okay, and if they do intervene, when they've intervened in the past, they've really pushed the yen up. Now, in terms, I'm just going to go to some comments here that I've written, and they're in relation to Goldman Sachs. It's an attractive recession hedge. That's a global recession. I think we face a global recession. It's got typical correlations with real yields and equity prices. Well, equities are falling. I expect them to fall further, so I think that could support the yen. Goldman Sachs fair value estimates JPY is more than 25% undervalued via the USD. It's even more undervalued against the euro. I prefer trading the euro short against JPY and the USD because I think the USD is going to be strong going forward. So I favour buying the yen in the crosses. Changing conditions in the Japanese economy is getting better. Okay, so I think the worst probably in for the yen, but price action will tell us. Actually, I'll just show you this chart here. Crashes in the past 40 years have seen sharp, quick yen appreciation. We have seen some risk off, but we haven't seen a market crash or a real catalyst for a big move to risk off. So we see if that can support the yen as well. Okay, now in terms of the price action, we come up here and we've come basically up to what we consider to be resistance, and we just want to sell through 141.30. So back through these candles here, effectively that tail there. If we can get through there, we're going to have our stop at 142.80. I've just put it behind those two reds, and then see if we can go to the downside and take out the stop. So you can see the risk against the reward is really good, obviously, if our view comes to fruition. What about if we carry on to the upside? But what I'd look to do is if we broke higher, I'd just look to sell through round numbers with a stop behind 144. Obviously, you can check this daily in the crosses section. But I think the bounce in the euro is a selling opportunity. Market just too bullish on the zone. Yen oversold extreme with a lot of speculators short. So we'll see if this one comes good. Where are we going next? USD CZK. USD CZK. Now, in terms of why I like the USD long on the Czech krona, basically, if Eurozone goes into recession, the euro goes down, that will obviously pressure the Czech krona, or put pressure on the Czech krona. Massive exposure in terms of exports to the zone. Also, I like it because it's an Eastern European currency. It did do a lot of business with Ukraine and Russia. That's now kind of disappeared. Another reason I like the look of the USD long is because the Czech central bank have appointed a governor who does not want to raise rates aggressively. So just looking for the USD to rise. We're already in. We're just basically at entry. Now, in terms where we think this one could go, it's off the top of my computer screen. I just want to bring up the monthly chart. I think 25 is on the cards with a possible run on to 26. So that candle tail there, you see the big blue when we had the initial COVID hit. Dollar very undervalued against the Czech krona historically. Now, if you look at where we are, I think you could buy if you got any blue. You got support here. That's where this red touched this support over here. Bounce back up. Then you've got another support level here, which is also the 20-day moving average. So not much risk considering going way up here. Okay. So like look of it. We'll see how it goes. They're the three pairs for today. Thanks for watching. Take care. Have a good day.